Hi, I'm Zach Fagenson with Miami Today, and I'm here at JPMorgan Chase's offices on Biscayne Boulevard for an interview with their CEO of their private banking operation in Florida, Alvaro Martinez-Fonts. Not only is he an avid opera fan, but he also aims to increase the bank's assets from $20 billion this year to more than $100 within the next 3 to 5.
It's interesting. There was a time that JPMorgan spoke exclusively to very wealthy families in the United States and abroad. I think I used to run our Latin America business before I ran our Florida business. And I know that in Latin America, for example, JPMorgan banks 80% of the billionaires on the Forbes 400 list. And in the United States, I think it's over 50, it may be approaching 60% today. That was sort of the image that Morgan had, and it's a correct image, and we're very proud of what we built in that ultra-high net worth space. When we merged with Bank One a number of years ago, Bank One had a very strong presence in the high net worth space, in a sort of, an ultra high net worth is defined differently by different people, but it could be anywhere from 25 million and above. Some people define it as 50 million and above. High net worth is defined as sort of 2 to 25, 2 to 50 space. Bank One was very strong in that high net worth space. And over the years that we've worked together, we have been able to meld what we did very well in the ultra high net worth space. I came from the JPMorgan side, with what Bank One did extremely well in the high net worth space. And last year we were ranked by Euromoney, which is a very prestigious award. I have to say it is very difficult to be recognized by Euromoney as the #1 private bank globally. And that's in the high net worth and ultra high net worth space. And what I would ask is that we allow Daisy to get you the details on that, just to make sure that I didn't misquote it. But I know we're the #1, and it was in high net worth and ultra high net worth, but I want to give you the exact award we won. But I think that's a huge recognition by the industry, because that is voted on by your peers. It is not based on advertising dollars in the magazine. It's not, it's a vote of your peers. And I think it is a huge endorsement that our ability to serve the wealth needs of people in different levels and different phases of their wealth creation is really compelling. So Jamie Dimon, our CEO, when he was in Florida a few months ago, said, if you have 2 million, 20 million, 200 million, or 2 billion, we have a solution and a place for you at JPMorgan Private Bank, and that's huge. When I started in this business, really we were looking for families with $50 million and above, and we do that very well. But it's also great to be able to work with families with $5 or $10 or $20 million. I think I don't think there was anybody, no matter how much money they had during the last downturn, that didn't get affected, and I mean that. We bank billionaires who were extremely affected. I think probably the biggest impact was that in 2008 everything correlated to one. Everything. The whole point of diversification is supposed to be to protect you, that when some things go up, some things go down. In 2001, I think pretty much, unless you were in cash, in short-term treasuries, there was nothing that didn't go down. As you go into the high net worth space, you have people, again, let's just use somebody with 10 or 15, $20 million. That's a lot of money. They tend to have a larger proportion of their net worth tied up in real estate. Real estate was absolutely decimated. And if you were in Florida, it was even harder hit than in some other areas. At the same time that your portfolios, are suddenly hit with a 30, 40, 50% drop. And, so there really was, bond portfolios, stock portfolios, it really was a crushing blow to a lot of people.